Truth is, I thought it mattered. I thought that
money
mattered. But does it bollocks? Not compared to how people matter.
Welcome, mention and other fine folks, to the Sunday Dispatch of the Black Letter, where we contemplate thoughts worth thinking as we try to navigate through the upside-down, topsy-turvy world we find ourselves in, hopefully reaching greener pastures on the other side, coming out healthier, wealthier, and wiser. Well, happy Thanksgiving to my American friends. We've got a few little things to take a look at here. First off, obviously, long lines form at food banks across the country ahead of Thanksgiving. I thought this was appropriate today, especially. For those of you enjoying Thanksgiving, I think hopefully it's a time to give thanks for perhaps gratitude for what we do have, when many folks don't even have enough food to provide for a Thanksgiving meal for their family and thus are at these food banks. Thought this was interesting here. We're serving 70% more people. 40% of the people who are coming here never looked for food assistance before. So things are really quite dire for a good chunk of what was the working population, which is now being decimated to some degree. So perhaps, if you're at the grocery stores in the next week, you can donate some food to the food bank for folks who are hurting and need some help with that department. So, real disposable income per capita in October. I thought some of these charts were interesting. You can read the article if you like. It's a longer one, but here's the disposable personal income per capita, nominal versus real. So nominal has been real dollars, and then per capita chained to $2012 is how it's done since 2012. Obviously not as well, but it's interesting here. This was the CARES Act that came through, and even still, disposable income is still higher than it was before the pandemic. So that's an interesting something to think about, why this is the case, and perhaps it explains it here, but perhaps a lot of people had more money than they needed with the CARES Act. But it's interesting that the personal income per capita is still much higher than it was post or pre the COVID crisis. Interesting. And yet there's a lot of people hurting. So it's difficult to understand these charts, I think, and perhaps where really the money isn't trickling down to. Obviously, folks who need it obviously aren't getting it. Very interesting. Perhaps even more interesting is this disposable personal income per capita growth, nominal versus real. And this goes back to 2000. And that's what they used as the peg. Interestingly, real disposable personal income has only increased, almost just over 40%, maybe 45% in 20 years, which is not huge. That's roughly, 2% a year, I think, maybe a little less. You can see here 43.2% since 2000, the real, and 106% since 2000. Of course, our inflation is taking a good chunk of that. But again, you can see that disposable income is still higher than it was prior to the crisis. At the blog OfTwoMinds.com by Charles Hugh Smith, our frustrations run far deeper than COVID lockdowns. And of course, that's understandable. He talks about different things here. He has a chart as well, but the market's being rigged and all of that. And JP Morgan makes $1 billion from gold trading after paying $1 billion fine. Embezzling a couple $1 billion also earns you a get out of jail free card. But it's interesting, what I wanted to draw your attention to is we each draw up a list of specific drivers of unfairness and frustration. And here's his list. So deep-seated frustrations are manifesting. Obviously, we see that with the cultural wars right now, as well as the inequality, etc., etc. The Federal Reserve's policies have accelerated wealth income inequality, implicitly enriching winners and penalizing losers. And I think what's also part of the frustration is that they refuse to admit that. By incentivizing globalization and financialization, the Fed and regulatory agencies have favored capital over labor 100%. And of course, this is the decade of the Great Reset, the fourth turning. So I think all of this is going to be undone in a great conflagration of some sort. Too big to fail and jail. That needs to change. We need to let companies fail, and we need to put CEOs in jail now, frankly. That needs to start happening, especially for some of these outrageous criminal activities that are being conducted, such as the JP Morgan issue above. Many people no longer have much of a stake in the status quo or a way to rebuild a stake. Rural America has been hollowed out by globalization and financialization, and the Fed and federal policies have generated a winner-take-most economy, choosing the winners and losers. 100%, I agree with all of that. And there's Gordon's list. I think Gordon might be a friend that also does this blog with him. And also some of the different scenarios that he is frustrated by. But I thought, interesting little list. and much with what I agree with. Fed weighed adjusting bond purchases to provide more help to economy fairly soon. Minutes show the Federal Reserve released minutes from its November meeting during which it held interest rates steady. Committee members had a lengthy discussion about the asset purchase program, suggesting possible changes ahead without indicating a firm date. In addition to the interest rate and bond buying discussions, members expressed concern about the pace of economic growth. Market participants would look into the minutes to gauge where policymakers stand on possibly ramping up or adjusting the asset purchase program, which currently has the Fed buying $120 billion of treasuries and mortgage-backed securities a month. Participants noted that the committee could provide more accommodation if appropriate by increasing the pace of purchases or by shifting its treasury purchases to those with a longer maturity without increasing the size of its purchases, the minutes said. Alternatively, the committee could provide more accommodation, if appropriate, by conducting purchases of the same pace and composition over a longer horizon. Federal Open Market Committee officials also expressed concern about the pace of the economic recovery. It seems to me that they talk out of both sides of their mouth. They seem to think that they have a lot more tools than they have left, and they continue to do. All they can do is just finely tune and adjust how much they're buying. Really, that's the bulk of it. And of course, none of this is going to help the average Joe and Jane Doe on the street. Officials favor an outcomes-based approach that would tie the purchases to achieving certain economic goals, and who knows what that is. Maybe their inflation target of approximately 2%, whatever that means. Okay, so the markets are closed today for Thanksgiving. As you can see, they ended up just a hair, it looks like. Perhaps those are the futures, sorry. The futures are up just a hair on the S&P 500, currently at 0.01%, now 0.2%, 0.02%. NASDAQ futures are up 0.36%, Dow futures are down 0.04%, and the Russell 2000 is down by 0.17%. It'll be interesting to see what that materializes or looks like come tomorrow when the markets are open, I think, for about half a day. And of course, gold is being traded a little bit. Obviously, many of the other markets are open, and we can see gold is still hanging around about the 1800 level, currently at about $1,813, and much the same with silver at around $23.34. So it's currently just still consolidating, nothing much doing. I think this is just the calm before the storm. I think we see it in the market being a little bit toppy. I think there might be a last gasp into what they sometimes consider a Santa rally, maybe into the new year, but I think come the new year, probably at least in the first quarter, the wheels are going to start coming off the cart, in my opinion. But who knows? We'll have to just wait and see. Nobody can really tell the future. Okay, so as expected, we've had quite a dive here in the market cap. So in the last 24 hours, the cryptocurrency market cap has lost a negative 12.7%, but still above $500 billion market cap at $512 billion and 5,980 odd coins for you to ignore. You can see it's been a bit of a bloodbath so far. The past 24 hours, Bitcoin has lost 11.6%, now sitting at $17,000.28. Ethereum is now well below 600 at $512. It's lost 13.5%. XRP even worse at minus 23.4%, but still holding above 50 cents, 51 cents. And everything else here is looking decimated as well. Cardano down negative 20%. And Polkadot down negative 15%. So this is now a buying opportunity, in my opinion. At these current levels of Bitcoin, I'm just going to be buying on the dip, and hopefully it'll dip even further, but I'm not certain. It had lost 3,000 originally, which at 19,000 odd, it was almost near 20,000 one point, so it has lost to maybe almost 3,000. I think this is probably a good chance to be purchasing some. I might consider that. And of course, here we have an example of that. So could lose some more. Bitcoin often will, have 30-40% pullbacks. So this is not unexpected. We could even expect another maybe 2,000 or so pullback, but we'll have to wait and see. It's starting to bounce off the little nadir here, as you can see, but who knows? This might just be a fake rally before it goes down again a little bit more. But I think on any dips, in my opinion, and what I'll be doing is buying on the dips, because I think Bitcoin has a very long runway and a great future. So as you know, we were just talking about Bitcoin and how it can lose 30-40% before running up again. So I wanted to see what the 8-Ball economist thought about will Bitcoin see a price of $15,000 by the end of next week. I think that's a possibility Of course, that would be a terrific buying opportunity. Ask again later. Okay, perhaps we'll have to come back and revisit that question tomorrow. Anyway, thanks so much for joining me, folks. I really appreciate you. For my American friends, happy Thanksgiving. For the rest of you, have a happy day. It's Thursday. We usually get the jobless reports today, but I think those came out yesterday, and so I missed that. But anyway, they were higher than expected. Of course, that didn't stop the stock market per se, but again, not as high as 800,000. So I'm still wondering if we'll see that level breached. Of course, I was thinking 1 million at some point by the end of the year, but I think that is now overly pessimistic. Okay, thanks so much for joining me. Remember, pay down debt, squirrel away some savings, and above all else, dumb spero, spero.